Hello, everyone, and welcome to another edition of Inside Investing, the show that helps you level up your financial knowledge and sharpen your investing skills. I'm your host, Hiran Amin. Thanks for tuning in during Investor Education Month here at TD Direct Investing. We've dedicated October to helping you build the confidence to invest and trade. We've seen a surge in interest around active trading among young investors since the global pandemic. But unfortunately, some recent studies suggest that their knowledge was often lacking. That's generally not a recipe for trading success. In fact, one study by the researchers at the University of California, Berkeley, found a whopping 40% of day traders quit just after the first month. But don't sweat it. Shay Huang, aka the Humble Trader, is here to help. She's going to share her ultimate beginner's guide to trading so that you can hit the ground running. Plus, she'll walk us through a trading strategy that she feels will work well for those that are just starting out. But before we get into all of that, I quickly want to highlight some of the features of our broadcasting platform to help you get the most out of your viewing experience. So today we're going to be broadcasting it through two different avenues. We're going to be starting with our broadcast primary platform here. For those who've tuned in there, we just wanted to tell you first about the media player. This is where you're currently seeing me on screen. You will have the ability to move this media player around. You can resize it and make it to whatever comfort level you want that'll help you have an enjoyable viewing experience. So check out those configuration buttons that's going to be located on the top right corner. Now, additionally, we also have some resources that we provided as well. So if I'll turn your attention over to the left corner, you're going to notice that we've linked a number of Shay's different channels, so her YouTube, her Instagram, and TikTok. So please click on that. And if you're not familiar with Shay, you will be by the end of this session. You can definitely, check her out and follow her different content platforms that she has available to us. Also, Shay's not a first timer over here. She's been with us, previously and run many different sessions with us. So if you want to check out her past events she's run with us, then you'll see those webinar links as well that she for the events that she's run with us. Now, we are focusing on Investor Education Month here at TD Direct Investing. And of course, we're rounding up the month here now with October winding down. But that doesn't mean the Inside Investing show is going to stop. We still have this show that we air weekly. And so going into November, we still have some more events coming up. You'll notice right at the bottom the future events for November that we have coming up. So please, whatever is your fancy, register for them. We're going to have a tantalizing event around the election time as well and how it could impact your portfolio. So please do check that one out as well. Lastly, I'm going to mention the Q&A, and as much as I'm going to put Shay under the grill, you will have an opportunity to also ask your burning questions to her as well. You'll notice there's a Q&A widget there, so just throw in your questions anytime throughout discussion today. Hit the submit button. We're going to queue them up, and when we get to a Q&A portion, we'll shoot some out to her for her to tackle them. Now, for our viewers who are tuning in through Shay's channel on YouTube as well as TD Direct Investing's channel, welcome to all of you. If you want to be able to ask your questions to her, then in the description, you will find a link to hop into our broadcasting platform where you'll be able to throw in some of those questions as well. So we'll be able to tackle them there. All right. With that out of the way, let me formally welcome our guest speaker today. Joining us is Shay Huang, founder of Humble Trader. She helps more than 1.3 million subscribers on YouTube learn how to trade. She also runs the Humble Trader Discord community and offers trading courses. Shay, it's a pleasure having you with us this evening, and thank you for taking the time.
Hi, Hiran. Hello, everyone. Thank you for tuning in. I'm excited for today's conversation.
Yeah, Shay, we're going to have a riveting conversation. I know today's all about a technical focus, and we're really going to get into the crux of it in just a few moments' time as we go through our questions. But I think it's important to just get to know who is the Humble Trader. So I'm going to just start by going through some, backstory questions about you. So tell me about this, Shay. You started out as a part-time trader before making it into a full-time career, of course. For those who might not know your backstory, what made you want to start trading in the first place?
Yeah, so for those who don't know, I started looking into day trading at first more than 10 years ago after college. And before trading, before YouTube, I had like a quote unquote a real job in the film and VFX industry. And unfortunately, the industry at the time, at least, was extremely unstable for me as a contractor. So I need to find ways to supplement some sort of income in order to pay rent in Los Angeles at the time when I didn't have steady job. So that's the reason I looked into trading. I just needed a way to make some money on the side to afford rent in the first place. And that's more than 10 years ago. And I was extremely unsuccessful for the first 2.5 years. And it's only after year 3 that I started to see some profits and some consistency. So yes, trading takes a lot of time, and you're not gonna start making a lot of money tomorrow or even in 6 months.
Yeah. So it wasn't the Lambo that drew you into this career, I imagine, right? Like you talk about that often.
It's a joke nowadays, but to be honest, I never wanted a Lamborghini. But I think it's quite funny. It's such a cliche that you see Lamborghinis in all the ads.
Yeah, exactly. All right, now I wanted to touch on one thing you mentioned because you talked about it takes a lot of commitment and courage to actually learn the ropes as a trader. So you mentioned that you use this to supplement your income. So how much money would you say you, let's say, how much money would you say you lost as you learn to trade? It's almost like your dues you got to pay in the school of hard knocks in the trading world. And also part of this is how did you keep your resolve to continue through some of those up and downs in their initial phases?
Yeah. I remember my first account was around $2,500 and I lost everything within 6 months. And after that, thankfully, even though I wasn't successful, I never quit my job. So I still was able to save up from my job, from my contracting work, saving up a lot of money on the side. And I just kept on refunding my day trading accounts. But I would say after 1 year, I definitely lost a little bit more than 10 grand. And the reason I never gave up is because even though I kept losing money, I was still in the red. There were still days and weeks where I see that it's possible to make money. So maybe I'll actually make $50 or $100 on certain good days. So I know it's possible, but I just couldn't figure out how to consistently make it possible for me to sustain myself in the first couple of years. But I knew it's possible. And another thing is, I knew that my career at the time, there was no way I can keep doing this for the next 20, 30 years. So I didn't have any other choice, to be honest. So for me, my focus was then to make sure I learned to trade properly and consistently over the course of 2, 3, 4, 5 years, instead of trying to hit it quick in 6 months.
Yeah. So you still had that transition period that you used because you're still earning. You didn't put all your chips into the, into the marketplace and try and, have a get rich quick scheme strategy out of it. So, all right, that's good. Let me ask you this now, because, we're talking about get rich quick schemes. People are attracted to trading with the hopes of making a lot of money, of course, right? And anything comes out, a lot of that comes with, you get the freedom and everything else. That is easier said than done. So how did you go about setting your income goals as you learned to trade when you first started out there?
I think when I first started, really the expectation was I just wanted to help pay rent. And at the time, I was living in a 2-bedroom apartment with 3 people, including myself. So I think I just had to make like $600 per month. I couldn't even do that, but that was the goal back then. So, that's also the goal after year 3, like, okay, start paying rent. Then it eventually becomes, okay, help pay rent and then pay my student loan debt. So I think I started out really small with the expectation really low. And that's why I never got too frustrated if I wasn't making full-time income the first year. And eventually
takes a bit of the pressure off, right? Off of you to perform as well. It takes some of that pressure and anxiety off of your shoulders.
The what? I'm sorry?
It takes some of the pressure off of your shoulders to really, perform and try very risky things, right? When you
don't have too high of expectations when you first start. I would say that.
Yeah. Okay. No, fantastic. Okay, we're gonna do a lightning round. I'm just gonna ask you a few quick questions over here, and your goal is to share your take in few words as possible. All right. So you ready to go here?
I'll try my best.
Okay. What would you have done if day trading didn't work out for you?
At the time, I was doing some side hustles on
Yeah.
e-commerce and Etsy. I was selling some graphic design work. So I think I would have done that route.
Okay. Perfect. Do you ever feel pressure to chase returns or outperform other content creators to impress your subscribers?
Thankfully, when I first started trading, this is more than 10 years ago, there wasn't that much content creators around the trading niche. So I would say in
Yeah.
the beginning, I didn't have that much pressure. The pressure really only started after 2020.
Okay. How do you deal with losses? How do you decompress, in other words? Like, do you have like a closet full of like stress balls, a punching bag somewhere? What's your go-to?
In the first 5 years, I'd say I used to have those like really cheap $2 keyboards from
Yeah.
Amazon or from Alibaba. So that was my stress relief back then. But nowadays, I think I matured a little bit more, hopefully. So I don't really smash things around anymore. I'm kind of like, I just deal with it internally, and I'm kind of used to the fact that there will be days where I'm red, and that's normal as a trader.
Yeah. It's just ingrained now as part of your persona. You just accept those. Okay,
Yes.
fantastic. Okay, that's our lightning round. Now we're gonna get to the good stuff. You're going to walk us through your ultimate beginner's guide to trading. So let's start here. First off, you mentioned on your channel that you feel swing trading may be a better approach for some beginners than day trading. In fact, you personally focused on swing trading in your first few years. So can you clarify for us and the viewers what the difference is between them and why do you feel that way?
So day trading is when you open and close a trade within the same day. That is day trading. Swing trading is when you open a position, let's say on Monday, and you
Mhm.
choose to sell it or close the position the next day on a Tuesday or a week, a month later. That is swing trading. The reason I did both, like a lot of day trading and a lot
Mhm.
of shorter term swing trading when I first started. I call it the overnight swing strategy. The reason that
Okay.
back then the overnight strategy worked quite well is because back then I was focusing on a lot of small cap stocks, even the lower price stocks. So if there was a strategy where you buy certain stocks at near the end of the day, next morning there was a high chance that it was gonna gap up pre-market,
Yeah.
and I would sell those and then go to work. So that's what used
Okay.
to work. And that's why back then I used to trade that a lot, and I share a lot of those strategies online as well. Nowadays, I still think swing trading is easy, or quote unquote easier, but
Yeah.
obviously it still has a lot of risk for beginners to get started. Is because swing trading large cap stocks nowadays, I think the trend is a lot cleaner. There's a lot
Mhm.
less opportunities for all these random small cap pump and dump stocks to get dumped or get diluted overnight.
Yeah.
But I would say I would recommend holding period to be a lot longer nowadays than just overnight or over the course of a couple of days, because that's how you can maximize profits. And last but not least, for the traders in the United States, there's this thing called the PDT rule,
Right. Yeah.
in
Pattern
which,
day trading.
yeah, so they
Yeah.
cannot day trade for more than 3 times in a 5-day rolling period. So for
Right.
those traders, swing trading will be the way to go to get around that PDT rule,
Yeah.
and to be able to take trades, let your winners run, hopefully, and to maximize those profits. So
Yeah.
that's the reason I think swing trading nowadays, large cap stocks, is the safer way to build small accounts for
Yeah.
beginners.
Like the gateway entry to get into that world. Okay. And just for clarifying, I know, thank you for bringing the PDT rule just for our viewers, so that is specific to the United States. That doesn't apply to Canada, because I know in the PDT there's a minimum capital requirement as well if you're going to day trade that you need to have in the accounts. Okay. So thanks for sharing that. The other thing I want to talk about, because you mentioned this and I really like it. You talked when you first started out that you need to obviously have trading capital, but you also need to have mental capital. So what's the secret to a successful mindset as a swing trader?
Specifically for a swing trader, I think the need it's actually necessary to be able to cut your losses quickly. I was
Okay.
reviewing my trading performance this year. I did it in couple of my YouTube videos. I noticed that all my losers, yes, I do take losses. Not all the trades work out. All the losers, I cut them within 5 to 7 days. And my winners, I let it ride out for at least 1 month. And I have some trades that's going into second month now, 2
Okay.
months. So I think that's the number one thing that will help you protect your mental capital. Because if you think about it, all your losers are cut within 1 week. That means when the ones that you're holding for the longest period of time, they should all be the winners. I think it's really easy to sleep at night and like not to stress out when you know that most of your portfolio, the ones that you're still holding for a long term, are the green trades. So I think that's the number one thing that you must do as a swing trader, to be able to follow your rule to stop out of losing trades when you're, whether you use indicators or any sort of invalidator to tell you that, hey, it's time to take that loss. It sucks, but guess what? That just frees up your capital to take other successful trades.
Okay. Yeah, that sounds great. Let me ask you this, because could you take us through your typical trading day, comparing your swing trading versus day trading?
Yes. I think this is where our viewers can kind of understand some of the big difference. When I used to day trade every single day, since I live in Vancouver here on the West Coast, my day would start at 4:30 or 5 a.m. local time, which would be 8 o'clock market time. So it's very, very early start. And then I start preparing pre-market at 8 a.m. market time, and market opens at 9:30. Then I'll trade from 9:30 a.m. to about 12 p.m. Eastern, which is my local time, 9 o'clock. And I will also come back during power hour at 3 p.m. Eastern to 4 p.m. Okay. So it is a long day, and it starts very, very early. And I would say, especially during 2020 and 2021, I was in front of my computer from 8 a.m. till really after hours as well. So long hours for day trading, not saying it cannot be done. I certainly did it when I was in my early 20s, but if for a lot of traders who are trading part-time, that's not really possible. Now, for swing trading, at least the way I trade now, for the longer term swing trades that I do take, I really don't need to scan or start looking at the market for swing trading until after 12 p.m. market time. So I'll see, scan for certain stocks are gapping up and trending up on the day. So from 12 to 2 is when I do my scanning, my research. By no means am I sitting through the entire 2 hours, but I definitely spend a good 30 to 40 minutes just doing research and looking at stock charts. And the actual execution, the entries I take, I usually go long. I rarely swing trade on the short side. The actual entries, I'll take them around 2 to 4 p.m. market time. And then once I enter, then I just kind of leave it alone, and I'll check on it the next day, next couple of days, and see if I need to stop out or it goes in my favor. It just keeps trending up higher. So by no means am I saying swing trading is easier, but I do think it's less time intensive. And also you get it's more forgiving in terms of you don't have to get your price or entries to be so precise or so accurate to the cent. For swing trading, you have a lot more room to work with. So that's
you're letting time do a little bit of the work for you as well. Gotcha. Okay, so now let's actually get into the strategy itself. What's your favorite swing trading strategy for beginners to consider as they want to learn the ropes?
Yes, so the swing trading strategy that I kind of refined a lot this year. It's really an extension of one of my favorite day trading strategies. And nowadays, I call this the daily range breakout strategy, in which I am looking for stocks that have gapped up above key daily resistance. The stocks need to be above the 200 SMA on the daily, as well as the 8 EMA on the daily. Ideally, we have some sort of really positive catalyst that goes along with it. I'm looking at big volume breakout, the stock breaking out above key resistance. And essentially, I'm trying to join the trend on the first day or even second day of the gap up to ride the trend higher to the upside. And bonus points if the stock is above, let's say, 52-week highs, multi-month highs, or even all-time highs. So those will be the kind of stock that I select. Essentially, a huge volume breakout with hopefully some decent catalyst.
Okay, so yeah, so you're giving us a bit of the screening criteria that you're using to look for those good candidates. So I know you talked, do you look at anything in terms of like specific, I know you talked about large caps. So is that your range? Are you looking at any sort of market capitalization, any intraday price changes that you focus on?
Yes, so I don't trade stocks that are below below 800 million. I don't take those stocks. So ideally, I want to look at stocks that market cap. Sorry, market cap. I want to see above 800 mil. Ideally, above a billion, and the stock price above $1 per share. So I don't swing trade penny stocks, small caps, micro caps, anything like that anymore.
Okay. Now, we've actually got some examples we're going to show. So you ran this screen a few months ago, and NVIDIA stood out to you as a potential candidate to trade. Why was that?
Yes, so this is back then, the not the current quarter earnings report, but the one they conducted in late May. So that'll be Q2 earnings report. Back then, if you look at the chart, NVIDIA is gapping up to, first of all, new all-time highs. They triple beat on all the earnings expectations. EPS, revenue, and the most importantly, guidance. They were guiding up, I think, I forgot the exact metric, 20 or 30% net growth for the next quarter. So, when you have fundamentally positive catalysts with really, really good expectations, as well as the chart, right? The technicals have to line up. The chart was the stock was above all-time highs. That checks all the boxes for that specific daily range breakout setup for me for the swing trade. So that was, I think, probably the best opportunity this year for that specific setup, and I did capitalize on that one.
So you mentioned fundamentals was a big thing you look at. So things like earnings beats, guidance increases. Is there anything outside of that that you also look for that would fit into that catalyst category?
Yes. So earnings beat, guidance increase, those are great. Other things such as stock buyback, stock split. So at the time, using the NVIDIA example again, at the time they also announced 4-to-1 stock split. Yeah. So that was also another factor that's definitely very positive for the company. Other things such as sector hype or IPO hype are also more short-term catalysts that I'd like to see as well.
Okay, excellent. So let's go on to step 3 now, and this is your process is particularly important, and that is performing technical analysis on the stock. So why is technical analysis so important to successful swing trading, in your opinion?
Yeah, because technical analysis, I would say, even though I do mention the fundamental analysis, the news and catalysts, technical analysis will always be the first thing I look at. Because if you think about it, swing trading, we are still trading. We need a chart to line up with our thesis. We don't want to be fundamentally right, but technically wrong. I don't want to be in a stock with no volume. Stock is trending downwards, but there's this really, really good piece of news. But if the technicals, the chart is not setting up, that means nobody cares about the stock. So I don't want to get stuck in those kind of swing trading positions. It's almost like holding the bag. So that's why technicals will always be the first thing I look at. Then I would say fundamental catalyst, anything positive, it's just like the sprinkles on the cake.
Yeah, I see. Yeah, exactly. And I love that you said that because when we teach the technical analysis course, we always tell our students or the clients that attend that fundamentals tell you what to invest. Technicals tell you when to invest in it. So you almost have to go there. It tells you those perfect, the setups as you said there. So love that. Okay, so let's talk about the signals then that you're looking for that help you spot good trading opportunities. What's part of your setup on your charts?
Yeah, so on my charts, for swing trading specifically, I always start
Yeah.
with the daily. So daily, I mentioned a little bit earlier that I want to see the stock above a couple of indicators. The 200 SMA, that's the one that a lot of big funds, a lot even the banks use it to see just an
Hmm.
overall whether the stock is healthy or not.
Okay.
If the stock is below 200 SMA, I immediately, disqualify it for any sort of swing trading on the long side. In fact, it might be better for the short side. Another thing I look at is the 8 EMA. So this one's a lot shorter term than the 200 SMA, obviously. 8 EMA, I see it as a momentum indicator in which I want to see the
Yeah.
stock trending above it to show that there's potentially like more continuation probability to the upside. So those two are the ones I use. I also look at volume. I want to see that there is
Volume. Yeah.
indeed volume breakout when the stock is starting to trend up. That should be very apparent when on the first day of the gap up, you want to see the stock gapping up with above relative volume, the R vol indicator. So that's another one. Yeah, and then intraday, sometimes I do look at the intraday chart of the first day of the gap up for the stocks
Okay.
that I want to swing trade. The intraday, I want to see the stock above VWAP, the volume weighted average
Weighted
price.
average price. Okay.
Yes.
Perfect. So let me ask you this, Shay, because you talked about the 200-day SMA, and then you're using the EMAs on the shorter time frames. Is there a reason why you don't use the 200 EMA and prefer the SMA?
I think it's an old habit. I don't think there's a huge difference, but I just learned. I remember taking some technical analysis courses long time ago, and 200 SMA just stuck.
Okay. Yeah. I know we learned from Stan Weinstein's book on technical analysis, and they emphasize that, or even using a shorter time frame. So just curious, what was your thought process in that? Thank you for sharing that. All right, we're now going to look at some examples of charts that appear to be poor candidates for your daily range breakout trade based on their technicals. So we're going to cue some up, and maybe you can take us through those.
Sure.
Okay, so there's our first one. It's a timely one. So,
oh yes,
DJT it is. Okay, Shay, walk us through this one.
So, sorry, I have to zoom in a little bit. Okay, so at the time when I provided this example, DJT, the stock, did not make a huge run over 200 SMA yet. If you look at the purple line, it's kind of faint. The purple line that's crossing around the $36 mark, that's the 200 SMA. So I wouldn't have taken the stock on a swing trade because at the time it was trading beneath that 200 SMA. So that would have been like a downtrending chart, and I wouldn't have taken that. I understand now the stock has since then been breaking out this week above the 200 SMA. Then, if I have to look at other factors such as catalyst, but we all know it's running into the US elections next week.
Yeah.
So but before this, I wouldn't have swung trade this stock.
Yeah. Okay. So being elected a president may not be enough of a catalyst then for this one. Only time will tell. All right, so let's go on to the next one here now. We have another poor chart. This is Tenon Medical. So yeah, walk us through this one.
Yeah, so this example, the stock TNON, this is a stock you can see it's long-term downtrending, right? You can see the highs are a lot lower than the peaks before. You see some September highs at $16, but the last time it tested that area was in March. But every time it spiked up, it just gets sold off lower and lower from $8 down to $6 to a low of $3 or $4. So this is not a stock I would have taken. Another thing is that the stock is also below the 200 SMA. That immediately disqualifies the stock. And also the volume. Yeah. The recent volume breakout on the stock hasn't been that strong. I know that you're seeing it a little bit higher than before, but it's a long-term downtrending stock. And I believe the stock is also a smaller cap stock. So that also disqualifies the ticker.
Yeah, so your primary objective is just the 200 SMA, first of all. So if it just is not breaking past that, nothing else really matters to even look further on that from what I'm getting. Okay. All right, so we've got the bad ones out of the way. So let's go on the flip side, and now we're going to share some of the charts that have good candidates for the trade. we're going to do maybe a favor for many viewers is Starbucks and looking at that one. So take us to this.
Yeah, so Starbucks is a good example of a chart that I would have taken. If you look at around mid-August, you see a huge gap for the stock from $76 gapping up to $92, and you see the huge volume surge at the bottom. So that's the volume breakout that I want to see. And also with the gap, the stock gets above that 200 SMA. So that's a lot of check marks right there. Technically speaking, that checks a lot of the boxes. And then if you look at the catalyst at the time is when they get a new CEO from
That's
Chipotle.
right, yeah.
So that's another thing. Like whenever you have a change of management in C-suite, especially the ones from like a very successful company such as Chipotle, that's really, really bullish for Starbucks. You know, investors like the fact that like the Chipotle CEO, it's been through many of transformed the company for the better, and they like that they're stepping into Starbucks, and that the chart, the stock chart itself is above all the EMAs. So this would have been a good candidate. You can see since then the stock is slowly trending up to the upside after that huge gap up, and never dipped below the first day of the gap up.
Yeah. Yep. I see that there. Okay. Excellent. All right. Let's roll to NVIDIA now. So obviously in the minds of a lot of traders over the past year and a bit. So take us through this one here.
Yeah, so the specific example I want to talk about occurred in near end of May. So you see NVIDIA before the end of May was trading around, this is post-split, $92. After the earnings beat and everything, it gapped up above $100 for the first time. So I didn't take the Starbucks trade, but I did take the NVIDIA trade. So after that first day of the gap up, I took the long on the swing side. I took 103, around 103. And then you can see that blue line there, that's kind of like navy blue. The stock just rode that 8 EMA for a while until all the way to 140 something. I think I held it for as long as 132. I probably missed out on 10 points to upside. But this is another example of a very, very clean trend after the stock gapped up with, again, volume breakout. It's above 200 SMA, above the ATMA, and the positive catalyst also lined up with earnings beats, guidance, stock buyback, 4-for-1 split. So they just everything lined up and checked off all the boxes for that stock.
Okay. So that's a good point you brought that up, because you said you started trimming the position at those levels. So that step 4 in your process is to create a detailed trading plan to execute the trade and also manage it. And I think that's the most difficult part, is getting into the trades fine, but then doing the management. So how do you think about position management when you're building your trading plan for this daily range breakout strategy?
Yeah, so the first thing I always think about is the potential risk, the loss, like where I want to stop out if it doesn't work in my favor. So what I like to use is usually use the low of the first day of the gap up. Oops. Yeah, so for example, that NVIDIA gap up, if you looked at the low of the day, it was around $100. So I'll give it at least $1 buffer room. So I would have stopped out around $99. That would be my stop. If the stock broke down that
below that level. Yeah.
Another way to have a stop is to use the 8 EMA stop. So if the stock gapped down and closed below 8 EMA, I would have gotten stopped out as well.
Okay. And in terms of like managing on the upside there, like are you looking at like when are you taking profits in? Like what are you looking for there? Because you mentioned you left, what is it, $10 or $12 on the table, and you got out of the early.
Yeah, so I will usually take profit, at least partial profit, whenever we see, I call it like an ATMA extension. It's when the stock pulls away from that blue line you see on the screen right now. Like, whenever there's a huge gap where the stock is just starting to break out, then I'll sell into those breakouts. So when you see the stock hugging along the ATMA, I try not to sell. But if it gaps up, if it pulls, and if it like breaks out, I'll sell into those breakouts. Sometimes too soon, like in this example.
Yeah, it's FOMO is a very real thing in this business, isn't it, Shay? And I'm sure we've all had our share of it there. Okay, Excellent. So tell me this. I wanted to go back to talking a little bit about, the psychology of the trade as well, because you've done this for many, many years. You've probably been hardened to it now, but was anything like any mindset that you still, have that you focus on as you go through your trades that help you, stay consistent and stay upbeat about trading?
Yeah, I think the most important thing I still have to tell myself this is you're not gonna be green every day or every week or even every month. In fact, I had a pretty terrible September and first half of October. I had a pretty terrible time. In
Mhm.
September, I was red. I was actively trading, day trading, and swing trading, and I had a really red month. So I sized down into October, and I didn't trade as much this month. But I
Yeah.
think that's the thing. Like I have so far accepted that there will be bad months and great months. So I really have to, whenever I go through these drawdowns, that's when I kind of take a step back, size down, and look at the bigger picture. Over a
Okay.
course of the last 5 years or the last year, I've been really green. So
Okay.
whenever I go through drawdowns, I think the mentality for a lot of newer traders is to revenge trade and to make back those losses. I think that's a
Yeah.
recipe for disaster and to even bigger losses. So that's why nowadays I try to take a step back and just take it easy and size down until the market goes in my favor again.
Yeah. Okay. That's excellent. I really like that fact, and not revenge trading, because that's something we really want to get into, and that can only lead into a snowball effect.
Mhm.
There's another question I want to ask you, because you've interviewed many different traders, yeah,
Yes.
and we talk about having an edge, and the tools that we use are basically used by the masses. Everyone's using an moving average and thing. Do you feel it's necessary to be successful consistently that you need to have an edge or some proprietary study or anything, or what is available to everyone can work as well?
Yeah, and yes, you're right. Every trader has an edge, but that edge is different for everyone. So some
Okay.
traders' edge is that they run systems that back test all their potential setups back to the 2000s, and that's their
Yeah.
edge. Knowing that in the long term, probability wise, their setup is going to work out most of the time, but not all the time. But that's what gives them the confidence and the quote unquote edge to stay in the market. For some
Yeah.
other traders, their edge is the fact that they're extremely good at risk management. They're always really good at cutting losses, keeping it very small. But when they make money, they have really outsized returns. And for
Mhm.
some other people, the edge could be they've written some sort of algorithm that help them identify trades and indicators that allow them to automatically stop out or to take profit. So every person's edge is different. I would say my edge is that I'm really good at knowing that when it's time to bail. That's why I've
Yeah.
always stopped out my trades within the first 5 days or 7 days for my swing trades. And I know what a really good winner looks like. Then I'll stay in there for 2, 3 months. So that's how I define my edge. Everyone's edge is going to be slightly different. I think
Yeah.
for beginners in the first couple of years, it's really just to practice all the with all the tools and all the indicators or all the best risk management practices they can have and really identify that what's going to give them the confidence to go into the market each day and to just keep repeat and practicing the same discipline.
Yeah. Okay. I love that. So let's actually, we're gonna now throw to our demo. So thank you for sharing your ultimate beginner's guide to trading with us. I'm sure the viewers are eager to start trading. So we do have a demo on our Active Trader platform to show you the tools that are available to set up similar screens that Shay talked us through, and your chart setups. So let's roll to that. We're going to begin with the screener tool. It's already set up for me under the scan tab, and we've got the screener widget loaded in here. So what we're going to do is first look at the criteria that helps Shay get some of those trade ideas for swing trading. So what we're going to do is go to the filter at the bottom, and we're going to start by adding our first filter under the stock category. And this one is all about the price. So she wants at least to look for stocks that are trading greater than $1 in value. All right, so $1 is what we're going to stick in there. Next one, again under the stock category, this one is going to be all about volume. So we're going to go down to the bottom, and we're going to look for average volume over 50 days. I'm going to make this greater, and then we're going to choose 500,000 or more. And this is the actual number of shares traded that you're going to put in the value here. The next criteria we're going to add in is the percentage move or intraday move being greater than 5%. We're just going to use percentage change in this case, and whether it's going to be greater than 5% is what we're going to select here. The final one that's going to be under the stock category, this one's going to be market capitalization. Shay mentioned, she wants to look for mid cap to large cap stocks. So in here, what we're going to do is select between so we can categorize those. So over here, these values are represented in millions. So we're going to put in 2,000 here, which represents 2 billion is what a mid cap starts at. And then we're going to go up to 20,000 here, which is up to 200 billion, which is what a large cap ends at there. Finally, we're going to add in our studies over here. So let's go into the study category. Now, these are going to be our moving averages starting with our 200 days. So we've got a 1-day candle loaded up. We want 200 instances of it, making that 200-day moving average. The operator is going to be selected as less over here. We're going to choose stock, and we're going to choose mark price. Now, the reason why we choose mark over here, because that is the price that, that's the mid price between the bid and ask. And the reason we choose less is because we want the moving average to be below the price, or the price, in other words, is above it. We're going to do this 2 more times over for the exponentials now. So go ahead and add study. This time around, instead of a moving average, we're going to choose exponential. This one is going to be our 8. Again, we're going to choose the same exact replication at the top, stock, and we want to choose mark price. And then we're going to replicate this one more time over here, add filter. And this one also going to be exponential moving average, but this one is going to be our 20 exponential moving average, and it's less again, and we want it to be stock, and we're going to choose the mark price. So here's your setup here. Now what you can do is, if you like this criteria, you want to call it back without setting it up, you can just go up to the screener function here and just save the filter as, so you can call it up at any time. So just give it a label and get it saved, and you can bring it up anytime at a quick with a quick click there. We're going to hit the scan button now, which is going to load up the results over here. Now I've got some of these I've got this screener function loaded up with my chart, or linked with my chart. So let's just say I click on FFIV. Let's go onto the chart and see how she does the setups over here. Now we're going to add some of those indicators that she likes to use, starting with at the top under this F functions symbol. We're going to click on that. That's going to bring up our indicators or studies, and we're going to start with moving average, of course. And so you can just type it in. It's a simple moving average is what we want to throw in there, and we're going to throw in 200-day over here, and we can adjust the colors to whatever we want it. I'm going to leave it at purple as what it is right now, and then we're going to do 2 of the exponentials, which is going to be the 8 and the 20. So let me go and adjust this length over here to 8. All right, and let's make this a distinguishing color. So let's make this one a yellow, and then we'll increase the width of that. And then the final one is going to be the 21 over here, and we'll make this maybe kind of a green color over here, and we'll increase the visibility on that one. So we've got 3 of these. The final one we're going to add that Shay likes to look at is the VWAP, or volume weighted average price. So you can just start typing in volume, and it's found right at the bottom here. Now we're going to make this a pretty stark, just white, so it stands out there, okay? And let's make it more punchy. Once you've got that, you simply hit close, and you're going to see those labeled in over here. So there's our 8, there's our 20, there's our 200-day, and the white represents our VWAP there. If you want to save this study set, again, what you're going to do right beside the function, it says indicators. You can just come in here and save indicator template. You can see I've had this one saved previously and just labeled it Shay. You can label it whatever you want. But there's the setup of the screener, and then the chart indicators that she uses, and she uses these moving averages to help her time her entry and exits on her swing trading strategy there.
I hope our viewers got a good glean on how you can set that up on our Active Trader platform. Now, keep in mind, folks, if you are interested in getting onto this platform, in the resources link on our broadcast platform, there is a sign up to join the wait list, and you can get this platform on your hands. But we're not done yet. We're now going to open the floor and take questions from our viewers. Shay, you ready to hear what our audience wants to know more about?
Yeah, I'm ready to answer some questions.
Okay, perfect. So what we're going to do first, you will notice that there is a poll that we have up on screen already. So audience, what you're going to do is you're going to vote for the questions that you would like for Shay to answer. We're going to pick the top 2 most voted questions, and then we're going to roll to it. So we'll give you ample opportunity to place your votes in over the next few minutes. While we do that, Shay, I'm going to start loading up the questions that we have. And our first question here that I'm going to bring up, this is a question coming from Kevin. So Kevin asks,
how important is it to look at the fundamentals of a company that you're considering investing in, 1 or 2 quarters of data or more? So what would you say to that?
Yeah, I want to clarify that most of the stuff I taught during this webinar is for swing trading, not for investing. But I would say, generally speaking, the longer you're holding a stock, the more fundamentals that you should look into. So let's say if you are investing for a stock and you're aiming for at least a year or 2 or more, then I think you should do a lot of in-depth research on that company's fundamentals, not just the last 2 quarters, but perhaps the last couple years of earnings reports. For the style of swing trading I do, in which I hold for at least a month or 2, that's within a quarter, right? So the most extent of research of fundamentals I'll do is read into the last quarter's earnings reports. That's what I currently do right now.
Do you do long-term investing, Shay, out of curiosity?
Yes, yeah, I do.
You do?
I buy and hold, and I don't really sell that much, but yeah, buy and hold the S&P 500, Apple, stuff like that.
Okay, good to know. All right, let's go into the next question. This one's coming from Ryan. Ryan's asking, did you take any formal education such as the CMT, which is a Chartered Market Technician designation for technical education, or the CFA for fundamental education? What are your thoughts on these designations being a trader?
I think as a trader, you don't need those things. I think those are important if you want to become like financial advisors or as accountants, that you need those. But no, for retail trading or active trading, unless you're working for big banks or into like trading firms, I think they might require those. But if you're retail, you don't need any of those certification. And honestly, if you're retail, you don't need to do those things. Like, it's not going to help you that much.
Yeah, I definitely agree. It's definitely for those in the portfolio management space, hedge funds, those pension funds. You probably need those when you're dealing with more like billions and billions of dollars on your books. Okay, so great. So let's roll to the polls. We got our responses in. So what I'm going to do is I'm going to ask you the top 2 questions that we have here. So let's start with the first one that we see. It says, I noticed you didn't mention the VIX or any volatility measures in your swing trading strategies. Why not?
Yeah, I personally never use the VIX, even when I was day trading. I know a lot of options traders who trade around the VIX. Let's say when the implied volatility is really low, then they'll take certain options trades. I don't do that. At least the active momentum trades I do take for the day trading and swing trading, I love volatility. So I guess if VIX is really high, I guess that I'm actually will take even more trades. I know the question probably came from the fact that you are scared of taking certain swing trades when the VIX is high. But for the way I trade, it's not a big concern.
Yeah, it's very hot and cold with the VIX. You see these spikes when it really does go up, and then like within a day or within a week, it's back down again. So, great for options traders. But so that's, you should say, you don't really dabble into the options world. Then you're mainly just on long equities or stocks.
Sure. I should have clarified. All the swing trades I take the actual underlying of the stock, because I don't want to have to deal with the K and all the Greeks.
Yeah. Okay, fair enough. All right, so the next question that was popularly voted for is one question I like. How many technical indicators is too many? It's almost like analysis paralysis. Well, what would you say to that?
Yeah, that's I would say when you can barely see the chart, it's just all the lines. And
that's when it becomes too many. Yeah,
that's too many. Well, everyone has their own preference. I would like to keep my charts very clean. So you just see the 3 lines that I use, actually the 2 lines that I use, and the volume. That's all I use. Keep it simple, because most indicators are lagging. If you notice, the way I use indicators, I just use them as a way to validate or invalidate my setups. I don't take certain entries just because of indicators going that way or that way. I keep it very simple.
Yeah, and might we add that you shouldn't be relying solely on an indicator as a buy or exit signal, right? We look for confirmations, validations, and other things like that.
But okay, so there you had it. And I love the fact that the strategy you took us through is very simplified. I think it's for most of us, we can work with those EMAs and the VWAP and really get going there. Okay, so let's go to the next question. We're going to roll to this. This one's from Brian. Brian says, some say that retail traders should avoid entering trades near the release of earnings reports. Would you agree?
I agree. Yes. All my trades, all the swing trade examples, I will only take them after the earnings reports.
Okay.
Yes.
Okay. Short and sweet. Robert's question is up next. He's saying, setting a stop loss trigger price is straightforward, but how do you then set a sell price, market or limit or other? So we know the downside risk, you're using a stop. So what are you doing on the upside? Do you automate that?
I always use limit. So there's a lot of things you can do nowadays. I keep it very simple. So I go on my phone, limit order, I look at the chart and I click sell. You can, for part-time traders, you can do OCO orders. Like if it hits a certain, the conditional orders
Target
or,
price,
you can have it hit. Let's say if it hits $50, you sell. I recommend limit orders only. I don't ever recommend market orders unless you're stopping out.
Okay, but this is just to emphasize, you're looking at these charts daily, so you're following it up. If you're not, like, do you set up alerts at all to say, hey, if it hits this price, let me look at it and then I'll set up my order? Do you have alerts in place?
Yes, yeah, I have I don't have order trigger alerts. I have price alerts. Yes.
Price alerts. Yeah.
Yes.
Okay. Excellent. All right, let's go to the next question. This one's coming from Jaspreet. Question is, what time frames for the charts are good for swing trading?
The daily time frame. Yeah,
okay.
I always use the daily chart. Yes.
So using one daily chart with what, like a 5 minute, 15 minutes on there?
So daily chart is where I see the setups. And then when I enter the stock, then I'll use, let's say, a 5 minute or a 15-minute intraday.
Okay, you go into the intraday after that. So you start with the higher time frames, then go down into the smaller time frames there. All right, perfect. Next question is coming from Rocky. Let's see what this question is here. Rocky says, hi Shay, do you use tick-based charts? If yes, what's your thoughts about it? Thank you. So maybe Shay, tell us what a tick-based chart is first of all, and then you can answer the question.
I don't use tick-based chart. I use candlestick charts. Tick-based charts are those like bar charts. I don't use it. I've never gotten used to it. So
it's a specific type of style, like a candle. Is that what it is?
Visually looks different. I don't like. I'm not saying it's wrong to use it. I just don't use it. Like there's no right or wrong answer. I know people who don't even use charts. So anything.
Wow.
If it works for you, then keep using a tick-based charts.
Yeah. What do they do? Like look at spreadsheets with numbers then and just crunch it in mentally?
I know people who just read the level 2, like the numbers.
Just the level 2.
Yeah.
Okay.
So I don't, I use the chart. Yeah.
Okay. Yeah. Definitely visuals help.
Yes.
Okay. So next question we're going to go to. This is coming from Ryan. Ryan's asking, what are some of the biggest challenges you faced as an experienced day trader in today's market?
I think. And for day trading wise, it's been difficult because I'd say like this year, I think the breakout, you get like huge breakout, then you have like very steady consolidation, steady uptrend. And that's a big reason why I switched majority of my trades to swing trading this year. I feel like day trading wise, the range has gotten so tight and like I'm not getting the big follow through intraday this year. But swing trading wise, over the course of a couple of weeks or a month, that's when you see the huge increase or decrease. So I think that's the biggest challenge for me as a day trader this year. But it's actually pretty sweet for swing trading.
Yeah. So you're really assessing the market as a whole and deciding which conditions are ripe for day trading versus swing trading then.
Yes, definitely.
Okay. All right, so next question we're going to have, this one's coming from Victor. Victor is asking, what are the most impactful videos, books, or courses that helped you early on? So I'm curious to know this one as well, Shay.
Yeah, so I would say, this might sound kind of controversial, but I think in the early stages, as a beginner trader, reading books is not going to help much. Now, obviously, I think it's good to read books. It helps with your psychology. It helps with a lot of like emotional, it helps you deal with emotional losses. I think those books are great for that. But it's like trying to learn how to play basketball from reading a book. You can't learn from reading a book. You have to learn from actually executing, actually like doing the drills and doing the daily motion of clicking the buy and sell buttons and looking at charts. So in the beginning stages, I think books are going to help a little bit, but it's not going to help the most. Courses, yes, I did take a lot of courses in the beginning. But I will say courses are great. I think it gives you a good foundation, but you also still need to go out and actually execute those trades. The courses where it's actually valuable is, I'm not going to name like specifics. I think people should do their own research. But I think the courses that are helpful will be the ones that show you how to identify setups yourself. What should the charts look like? If they use indicators, what should they look like? You need to be able to identify easily what the specific strategies look like. And you need to know the courses or whoever's teaching you this should tell you where your stop losses should be. That should be the most important aspect of any strategy. So I think that should be enough information for viewers to assess whether a course or certain products might be good for them or not.
Yeah. And I'll harp on that. Experience is probably the best teacher, as you just alluded to. I know paper trading is also a big thing. So if you're not, quite, you're wanting to put your real money on the line, then paper trading is a great avenue. And what we just demonstrated to our viewers on Active Trader, there you can actually set up a practice account with us, open it up. It gives you the full suite of the platform, and you can try trades out and get them tested before you're ready to dive in with your real money there. Okay, so let's go to the next question. This one's coming from Akshay. So this question is, how do you prevent stop hunting? Okay, this is a term that I've heard for the first time. I don't know if you've come across this one, but tell us about that. How do you prevent stop hunting?
Yeah, I think for day trading, this applies more. Stop hunting is when you have a live market order or can be limit order, like a live stop placed on your chart. And it feels like the market makers are dropping the stock price on purpose to hit you and then have the stock bounce off. I think that applies very strongly for day traders, especially if you're trading lower liquidity stocks. So how you can avoid it is make sure you're trading stocks with really high liquidity, high volume, lower spreads. That's how you can avoid it. But at the end of the day, if you get stopped out day trading, you can always re-enter. A lot of times the fact that if I get stopped out and then the stock jumps back, I use that as a confirmation that I should go back in or go in bigger. Not all the time, but I would say stop hunts doesn't really apply to swing trading. At least the strategies I trade, I am manually looking at a chart every day, and if it looks like it's gonna close below either the EMAs I talked about or the specific price, then I manually go and click stop out. So it doesn't apply to swing trading, at least the way I trade.
Okay, well, there you go. I learned something new, stop hunting there. Okay, well, thanks for that. All right, Shay, we're going to go to our last question. We're, Father Time's calling on us. But this is a question coming from Patrick saying, what is your, I'm sure I'm not following what that word is, to walk away from it all and retire? Oh, dollars. What's your magic dollar amount that's going to say, okay, you know what, I'm done. I'm going to pack it all up. Enjoy the beach or whatever you'd like to do there. Do you have a magic number?
I don't think so, because no, I think back then when I was in my in my former career in VFX, I had a magic number and that I want to retire. But like I love trading, so I don't know. I don't think I think even if you give me $100 million right now, I would still wanna chill on the beach and look at the markets on my phone. So I don't know if I have one. Sorry, I feel like that's such a cop-out answer, but but I don't think I have one. I mean, if you want one, I'll tell you 100 million, but I would still want to look at the chart. Like if
you're still looking at the chart, you're not gonna peel away from it.
Yeah, like if Nvidia gaps up to 1,000 tomorrow, you bet I'm gonna wake up at 5 a.m. and look at Nvidia. So I
Yeah,
don't know.
nothing's gonna pull you away from having to wake up. So no,
Yeah,
that's a fair response. Once a trader, always a trader, I guess. And it's a passion, right? At the end of the day, and you're just pursuing those. So
yeah.
Shay, it was such a delight talking to you and getting you to share your insights with us. You know, on before we part ways. If there's a question that I failed to ask you that you think was important for our audience to know, is there anything that you'd like for them to know, or any final thoughts you have?
I think I always see questions of people asking whether day trading or swing trading is for them or which one's easier. I would just say like neither one are easier than the other, but to see whether which one suits your lifestyle or risk tolerance better, you should try it for yourself and track everything on your journals. And I think just from, like we said earlier, the best teachers is experience. Just from
Yeah.
your actual practical experience, you'll know which suits you better and your risk tolerance. And both are risky. You know, I'm not saying one is easier or less risky than the other, but you should decide that for yourself.
Yeah, just yeah, what's in your risk appetite, and that's absolutely true. All right, well, again, thank you so much for joining us, and for all of those in your audience, thank you for tuning in on both Shay's feed and our feed on YouTube, as well as on our main broadcast platform. Before everyone parts, make sure you do register for our upcoming live webinars. Again, check them down in the console there, what's coming up and lined up for November there. We run these shows on a weekly basis. Also, we have our content. You can watch reruns of it. We have our library of on-demand available both in Webroker through our Learning Center and also on our YouTube page. And also, don't forget, if you haven't already followed or liked or subscribed, but please do so to Shay's different channels. And also do follow us at TD Direct Investing. We produce many different educational content as well. So you'll find those links. We're on Instagram, we're on YouTube. Check them out at the bottom there, and you'll be able to find us. All right, and with that being said, thank you again. Enjoy your evening, everyone, and best of luck to everyone in the markets there. Shay, it's been a pleasure.
Have more questions? Check out the links to the right and in the description below.